Hey everyone, welcome back to Corporate Decoder. On today's episode, we're diving into Urban-Gro Incorporated, latest financial report, and let's just say things are a bit more interesting than a quiet Tuesday. So Urban-Gro Incorporated is basically telling us about the financial health of their business over the past year. And it is a bit of a roller coaster. They're involved in things like designing, building, and selling equipment for controlled environment agriculture, which is a fancy way of saying indoor farms. Let's get straight to the money because that is usually where the real story is. Looking at their balance sheet, it is a snapshot of what they own and what they owe. As of December 2024, they had about $19.5 million in total assets. That is down from almost $50 million at the end of 2023. So that is a big drop. On the other side, their liabilities, what they owe, went up slightly to about $44 million from $39.4 million. The big number that jumps out here is their shareholders' equity, which is basically what is left over for the owners. It is negative $24.6 million in 2024, a huge change from positive $10 million in 2023. This means technically at the end of 2024, they owed more than they owned. Now let's talk about how much money they're actually making. Their total revenues for 2024 were about $40 million. This is a pretty significant drop from 2023 when they brought in nearly $70 million. That is a nearly 43% decrease in revenue. We see this drop across the board. Construction design build revenue fell by $26 million. Services revenue dropped by $3.1 million. Even equipment sales were down by $500,000. Ouch. This drop in sales directly impacts their gross profit, which is the money left over after paying for the direct costs of making their products or services. For 2024, their gross profit was only about $2.9 million, which is just 7% of their revenue. This is way down from 2023, where they had almost $10 million in gross profit, which was 14% of their revenue. The report mentions they had lower margins on construction jobs, meaning they might have lost money on some of those projects. And it gets a bit tougher here. Their operating expenses went up for 2024. They spent $38.4 million on operating expenses, which is a 16% increase from 2023. A big reason for this jump was a $5 million increase in something called impairment of goodwill and intangibles. This sounds like they had to write down the value of things they thought were worth a lot, but now aren't. All of this together leads to their bottom line, their net loss. For 2024, Urban-Gro Incorporated lost a massive $36.5 million. That is a lot worse than their $25.4 million loss in 2023. This means for every share of stock out there, they lost about $2.62 in 2024. Now, moving on to what the company is saying about its own situation. They're talking about their liquidity, which is how much readily available cash they have. As of December 2024, they had less than $1 million in cash. That is decreased from over $1 million in 2023. They mentioned they have negative working capital of $26.5 million, which means their short-term debts are much higher than their short-term assets. They're also heavily reliant on a line of credit from Gemini Finance Corporation, which has had some serious issues. The company also has a lot of debt. On their balance sheet, they have about $44 million in liabilities. A big chunk of that is notes payable, which is money they borrowed. They have over $6.7 million in notes payable as of December 2024. And this has increased significantly. Now, this is a big one. The company has had a lot of trouble staying listed on the Nasdaq Stock Exchange. They received multiple notices from Nasdaq for not filing their financial reports on time. They've also had issues with their stock price dipping below the required minimum bid price and their stockholders' equity falling below the required minimum. They've been granted extensions, but they are clearly struggling to meet these basic listing requirements. This is a serious red flag, as it can make it harder to trade their stock and attract investors. The company itself flags a ton of risks. They admit they have a limited history of operations and a history of losses. They are heavily dependent on a small number of clients, and if any of those clients leave, it could significantly hurt their revenue. They also point out the intense competition in their markets and their reliance on third-party suppliers. One of the biggest risks they highlight is their connection to the legal cannabis industry. Even though they say they don't sell cannabis directly, the federal illegality of cannabis in the US creates huge uncertainty. They worry about changes in federal enforcement. They also point out that banks are often hesitant to work with cannabis-related businesses, and this can make it hard for their clients to operate. And remember that Gemini loan we just talked about. Well, it is a whole saga. There was a default, a foreclosure on assets, and a lawsuit from Gemini Finance Corporation for over $1.4 million. They eventually settled this by agreeing to issue shares of their common stock to Gemini, which can dilute existing shareholders. This whole situation highlights serious financial distress and issues with managing their debt. There is also a lawsuit from their former chief financial officer, George Puller, alleging breach of fiduciary duty. The company believes they have strong defenses, but legal battles are always costly and distracting. They do mention they have cybersecurity measures in place, and their board is involved in overseeing these risks. They seem to be following industry standards and have policies in place to protect their systems and data. However, like most companies, they acknowledge that despite these measures, breaches can still happen. Let's look at their leadership and executive compensation. For 2024, directors who are not employees received cash and stock awards. For example, Anita Britt, who is an audit committee member, received $70,000 in cash and about $21,000 in stock awards. The compensation committee, which is responsible for setting pay, aims to have compensation competitive enough to keep executives and align their interests with shareholders. Their CEO, Bradley Nattrass, had a total compensation of over $711,000 in 2024, including salary and stock awards. The other top executives also received substantial compensation packages, though some have since resigned. Jason Archer, the former chief operating officer, resigned in early 2025, and Richard Ackright, the former chief financial officer, also resigned in early 2025. This is a notable detail as executive turnover can sometimes signal underlying problems. Looking at who owns the company, the CEO Bradley Nattrass owns a significant portion, over 1.1 million shares, which is about 6.9%. All current executive officers and directors together own about 1.89 million shares, representing 11.6% of the company. This means management and the board hold a decent chunk of the company, which can align their interests with other shareholders. Now, for my take on all of this, Urban-Gro Incorporated is in a really tough spot. Their revenue is plummeting, their net loss is widening, and they're struggling to stay listed on the NASDAQ. The massive drop in their shareholders' equity and the increasing liabilities are serious concerns, especially coupled with their cash on hand being so low. The company acknowledges its history of losses and the challenges of operating in industries like cannabis that face federal uncertainty. The multiple warnings from NASDAQ are a clear signal that they are not meeting basic public company standards, which is never a good sign. While they've made moves to cut costs and have a plan for the future, including a potential merger with Flash Sports and Media Incorporated, the current financial picture is bleak. The fact that their former CFO and COO have resigned also raises questions about internal stability and confidence in the company's direction. The company's future probably hinges on this potential merger with Flash Sports and Media Incorporated and their ability to regain compliance with NASDAQ listing rules. Without significant positive changes, the risks are very high. Alright, that is our breakdown of Urban-Gro Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description for more discussions. Thanks for watching. See you next time.